All right, coming to you with an update here in June on what's been happening in the low country real estate market. Things are still pretty solid. Look at year-to-date information and statistics. The number of listings that have become available in the market up about 16%. The number of pending sales up about 6%. The net of that is the number of closed deals year-to-date compared to this time last year, up about 10%. And a couple other tweaks in the market. We've just gone under 98% as the average sales price to list price ratio, and the number of days on market has inched up, actually up about 30% into that about 56 days on market. Average sales price is still really strong. We're hovering right around $750,000. So things are looking really good in the low country, staying stable, staying strong, incrementally going up, but nothing too crazy. And talking about that, earlier in the year, I sat down with Drew Brown over at Island Time Rentals, and I talked to Matt Webster at TD Bank to talk about those interesting things about what's the rental market looking like in the low country and what's happening with interest rates. So we're pulling that information together for you today with an update here in June, sitting down with those guys in just a second so you've got the update on what's happening in those arenas. So let's get after it. Hi guys, we're hanging out with Drew Brown again. Drew, it is summertime in Hilton Head.
It is.
Happy summer to you.
Happy summer.
Busy time for you.
Yes.
For you guys.
Yeah, right now, obviously our island's going to be 100% occupied for the majority of summer. We're really excited to have people come in town.
100% or close, right? So let's talk about what's trending. You and I got together at the first part of the year. Let's do another check-in on sort of what's happening. You and I talked before about in 23, people went on some European vacations.
Oh, yeah.
People went on some cruises. And there was some talk about those people that they're going to come on back. They're coming back. Has some of that happened? Is a little bit of that?
Yeah, so we are seeing a lot of people coming back to the marketplace. What we're really seeing is, like we talked about earlier, is changes in the length of stay.
Okay.
So we're seeing people that are coming back. Numbers are very similar to last year. I think what we're really seeing is the importance of the property manager, or if the owner's doing it themselves, really making sure that they're staying on top of it.
Okay, so let's talk about number of days. So some of those people are coming back, although I can say that, because you and I were saying, well, not everybody's going to take a European vacation every year. Like that pattern probably is not sustainable economically. Maybe it is. For some people, I'm sure it is. But maybe we would see some of those people come back. They probably are coming back a little bit, but I'm still hearing people like, oh, we're going to Europe, and that's what. So maybe that's a 2-year kind of trend. Like people are shaking off COVID and all that kind of stuff. They want to get off the rock.
It's still about experiences, which is both a positive and negative for us, because people are taking those experiences all in the United States, Europe especially. And again, cruises are still really popular. Lots of deals being made there. So you do see that as an impact and a variable.
Yeah, for sure. So the thing about like the number of days, because if you've got a rental property, it's not booking up completely. You've got a couple choices. What's the advice as a property manager? You got an owner that's saying, gosh, we haven't quite filled out those last few weeks of July and August or whatever. What's the advice at this point?
Yeah, so to your point, it really comes down to a couple of different strategies. So when you're thinking about it, you want to think about the number of days, which is really important right now. As we've said, when we look, the number of searches for 5, 4, or 3 days have increased almost threefold on the island.
Interesting. Do people have less time? Do they want to do kind of 2 trips on the course of they've got a week-long vacation, they want to do 3 days over here and 4 days over there? Or what are you hearing from people?
Honestly, all of the above.
Okay.
What we're really finding, one, is people aren't having as much time to get away. Again, a little bit of a concern still with some of our, economy. We're election year. We've seen so many different variables impact the market.
Yeah, and economy, rental rates got high. It's expensive to rent around here, so I can understand wanting to economize that a little bit. So you might tell an owner, hey, let's open this up. Instead of it being a 7-day rental, let's open it up to a 4-day minimum.
Absolutely. Correct.
And we might fish in that pool a little bit more.
So one of the best reasons why you would do that is you have the ability to get 100% of your rate for those days that you're rented versus 0% rate.
Versus, so you're not discounting really, you're just you're accepting less of a full booking.
Right.
And so switching gears on that, where are people coming from? You know, I've talked to you about progressively over the year, buyers, we've seen them come from 29 states, 30 states the next year, 31 states was last year. We're still trying to figure out how many states are going to be represented just through us in 24. But that's a growing number, and I know we've all seen a lot more people from from our perspective, from the West, if you will. Are we seeing that on your side?
Absolutely. One of the things that we're seeing is a lot of people from what we would kind of call not necessarily the South, but really the Southwest over to Texas. So Texas has become a very large market to us.
Really?
We're seeing a lot of driving markets. I actually looked at our feeder market report this morning. Top 5 are traditionals: Ohio, Pennsylvania, New York, New Jersey. You know what came in 5th? Colorado.
Colorado came in 5th.
Right.
Isn't that fascinating?
Yeah.
I was thinking as you said that, I think Utah made our state list, our annual state list for the first time in the spring. So word is out.
Yeah, we have clients from Utah, by the way.
Yeah, right, of course. Well, so, you know, and by the way, your business is a feeder into my business, right? I mean, raise your hand if you started, you know, you moved here, but you started being a renter here at some point. So I understand that. So you've got number of days, might be a tweak. Probably some companies out there that are adjusting prices if they feel like they need to. I can understand that being some kind of model. But you and I were talking about quality. You know, in my business, buyers are seemingly drawn to something that doesn't need a lot of work. Renters, I mean, people are people, but in that category, short-term renters, are they kind of looking for the same thing? They're looking for turnkey?
Absolutely. What I would say is anything that the buyer is looking for, the renter is looking for at least one or twofold. Because again, it's about convenience, it's about comfort, it's about that feel of luxury. You know, again, when people are here, the whole purpose is to unwind, relax. You know, so the importance of having quality in your property and what your property is about is just so important.
Yeah, sure. It's all that experience, right? As you said, it's a valuable opportunity for somebody to spend a week of their life, spend a fair amount of money. They want all the goods with it, including tech, you know. And so let's talk about tech. And you were mentioning about demographics. I'm fascinated about that. Like, not just where are they coming from, but who are our renters? Who are our vacationers? I call valued visitors. Who are our valued visitors? What's that looking like?
So
shifts in that?
A big change in that too. So, you know, we are a huge multi-generational destination. So
always have been.
Yeah. Right. So 2-3 generations, typically 3 or 4 or more. And what we're seeing is we've seen so far a shift in the age demographic for purchasing to below 40. So what we're seeing is before the check holder, as we would call them, a lot of times were either parents, grandparents, and that type of thing. It's not that demographic in terms of, you know, the younger generations aren't traveling. It's now that they are having to hold the purse strings, which also then correlates with length of stay, 3 or 4 days, 5 days, different days of arrival, which not only help us as a community, but help the guests coming in different days of the week, you know, and again, then to your point, price. But I would say that portion of the demographic has very much put emphasis on the quality of the property.
Yeah, for sure. Technology, we talked before about technology, having access to everything on your phone, getting notifications, all that kind of stuff is really cool. So here we are, you know, we're in the beginning of the summer season, and it's looking good. The forecast looks like it's still going to be pretty good. Maybe not as strong as 23.
100% agree. You know, when I said before in the beginning, 100% occupied, what it really just means is there's 1 million people here. Legitimately, there's 1 million people on our island in a month. So
I love hearing, and I'm sure anybody watching that's familiar with that train of cars that reaches from the, you know, this side of the bridge out deep into the mainland on a Saturday. I love hearing about the ability and the kind of the trending of people maybe having alternate check-in days.
Yes.
It's got to help with that. I mean, I realize the bulk has got to be. I'm sure the bulk is still doing.
We still get a primary amount of people that want to come in, but Sunday now is one of the bigger days to travel. Friday, you know, so to that end, we see that in the marketplace, you know, what people are looking for. What I would say is the importance of, whether you're an individual homeowner or you're working with a professional manager, is the flexibility of understanding that Data is very important in
for
trying
sure.
to be open. You don't always have to give a discount. You can give different days of arrival. You can give different lengths of stay. But if it does come down to it and you have to make an adjustment on price, you have to know where you need to be as a homeowner or as a, a company.
Sure.
Because if you don't, then you're just giving away.
Well, in our side of the business, right, is that people are studying, well, what are my taxes? What are my insurance?
Correct.
Am I paying a regime fee? What are the POA fees? What's my cost to carry this property? And how does that relate to my expectation or hopes or needs for rental
rentals.
income?
Yeah.
Which I'll still always look back and say, it's such a blessing to have a market area where people want to come and spend their vacation money to stay in your property, your villa, et cetera. I mean, it's just not all locations have that.
In two, there are so many additional positive effects. All of the additional accommodations taxes that come from that. All of the wonderful things that we're able to do here on our island. So we want people to see this. We want people to come and visit because that just makes this place nicer. Better parks, better roads, better paths.
Yeah, and what are people interested in? Just real quick, as you're seeing these valued visitors show up, is it all about the beach? Is it beach and golf? Are they out there cycling? Are there water sports? Is it anything and everything? Are you seeing anything new or trendy that's kind of...
So glad you asked, because we actually just this week did some market collaboration to get this information. So what we have seen is always going to be a beach destination, always going to be a golf destination.
Yep.
But what we have seen is the value in the growth in culinary, heritage, in any type of history, and we're now seeing finally the impact of water sports in the marketplace. We get so many requests from people to how do we rent boats, how do we get kayaks. We have a program that we do that allows people to do that. So that's awesome. Another option that you could be looking for if you're having trouble trying to get bookings, is incentivizing it with guests to say, what could you possibly have? Gift card, gas card, some paddle boards, some kayaks. Got to think outside of the box in types of market like this.
Yeah, connect up with my buddies, Michael and Taylor Withrow over at Island Head. They've got all sorts of great water sport programs and availability. So that's what it's going to look like, right, this summer. But no more toll plaza, right? That's got to help with all that, busy beaches, that sort of thing. I was looking at a community page on Facebook in Sea Pines. There was some concern about sharing the leisure trails, and it was interesting because it came down to a discussion about, well, is it a bike trail? Is it a leisure trail? And the reality is that it's all the above, right? Yeah. And, you got people walking their dogs, and then they're walking three abreast, and then you got some kids zooming around on the bike and that sort of thing. And I do think it's important that anybody that is visiting, and I think you guys probably put this message out there, is safety on those bike paths or leisure trails is really important. Yeah. Consideration, caution, making sure we don't have some kind of conflict.
Correct.
It's super important.
The other part of this time of year is the biggest thing we look at is safety. So making sure to check properties, for different things. Like if you have grills, make sure your grill is set up correctly. In the next month, you're going to be dealing with July 4th.
Yep.
And then, anything within the property. So it's a whole new gamut of things that, you have to worry about. But that's one of the great things about it is there's always a new challenge every day. And for us, we just look at it as another way to do things great.
Yeah, well, you're awesome. And I know this is a super busy time for you and your staff and everybody in your industry, and we appreciate all that you do to make that vacation experience meaningful, where people want to return back. And then ultimately, so many people end up calling this their community. Yeah. So, all right, bud, thanks. Hey, have a great summer.
You too. Thanks, Chip.
Okay, so we're hanging out with Matt Webster, my best buddy, TD Bank. Man, we go back a long time.
Way back.
Think about pushing towards 30 years where we've been doing
probably
business.
So.
And go back in a little bit more recent history. We talked back in January about, all right, what's the forecast? Everybody talks about interest rates, right? Like in your business, mortgage business, everybody's talking about interest rates. And actually, as we're just sort of powwowing, we realize one thing that's happening in the market is prices keep inching up. And so it has an impact on people's final payment of what they've got to make month in and month out on a mortgage. So it's not just, interest rates. It's also the fact that real estate's the values just have gone up.
Right.
So that translates to sort of that uncle point where people are like, man, that just ends up being a pretty big payment. And so I was kind of curious, kind of come forward now, here we are, let's say mid-year 2024. What's happening? Is the phone ringing more for you? Are people engaged more? Have they swallowed the pill on the fact that interest rates maybe are not going to go back down to 3 or 4%? Like, what are you seeing out there?
Well, I do feel like people kind of swallowed that pill 6-8 months ago when rates
Yeah.
really jumped up and people put on the brakes and they realized, okay, this is where we are now, right? This is it. So yeah, the phone is ringing. People are taking out loans. People are borrowing money. People are buying real estate, obviously.
Yeah, sure.
The good news lately is that rates have been coming down.
So let's talk about that, because when we talked in January, we were talking, 6 months prior to that was that 8% in October, September
November.
kind of range, right in there. Okay. So what's happened since then? It seemed like it came down to around 7% or so. And so where are we now, and what's the trending looking like?
So October, November was, like you said, 8%. We met in January. Rates had jumped all the way to 7. Big move to 7. I thought at the time things were going to keep going down. They actually went back up, probably around 7.25.
Yep.
But now over the last couple of weeks, we've had some better than expected inflation data, a little worse than expected economic numbers in terms of unemployment, things like that.
Sure.
So that over the last couple of weeks, we've seen rates come down to below 7. So right now we're about 6.875.
Okay, so that's good.
For a 30-year fix.
Because my general sense was just a couple of weeks ago, it was north of 7.
It was north of 7 a few weeks ago.
Okay. Is that a daily thing? Like, are you wake up every day and you're like, oh my gosh, this is, it jumped by 1/8 of a point. Is that every day, or is it some weeks it stays pretty steady, or what's
We
it
get
looking
rates every day. Around 10:30, 11 o'clock, the rates come out.
Yeah.
Sometimes they're up a little, sometimes they're down a little, sometimes they're the same. So,
Sure.
But they can move daily, or even later in the day, you might get a rate change.
Okay.
Sometimes that happens too.
And again, reminder on that, someone calls you and says, okay, I really like that today. The news at 10:30 was, it looks good. You pick up the phone and you call someone and say, we ought to lock. How long does that lock last for again?
We can lock the rate for 30 days, 45 days, 60 days. Depending on when your closing is, we can lock it for that
Do you
period
have
of
to
time.
pay more to have it locked longer, like 45, 60 days?
Typically, the 30-day rate is better than the 60-day rate.
Okay.
I think right now at TD, it's all the same.
I got it.
It's all the same at TD. Other banks might price it differently.
I got it. And because, as we're talking about, like, prices have gone up a lot, affordability is a challenge in some instances. Are you seeing more instances where people are borrowing over 80%, maybe 90%? Are those programs available? Are people, like, what's that look like? Or are you finding people are like, no, actually it's the other direction. People are like, hey, listen, the prices is higher, so I wasn't going to get a mortgage, but now I'm thinking maybe I'll get a 50% mortgage. Like, what's happening there?
I mean, we can do 90 and 95% financing, but in our market, people are typically putting 20% down or more.
Okay. And is that primary and investment type properties?
On both
situations?
80% is typical, but it's not unusual for people to put down a lot more than that. We don't do many above 80. I think that's just our market.
Yeah, right. And so, and then, we're talking with sellers and buyers and trying to figure out timeline. Can you get something closed in 30 days, 40 days? Like, what's
30,
a typical?
30 to 40 days is typical.
Yeah. Has that process for underwriting, has that kind of shortened a little bit? Like, can you get through underwriting pretty quickly now, or is that a little bit more complicated?
I feel like it's gotten more complicated.
Okay. Yeah. Why is that? Like, what's happening?
I'm sorry to say, I think it has gotten more difficult.
Yeah.
I don't know. I think with technology, they're asking for more and more stuff all the time. It has been difficult.
Yeah.
It's a challenge.
I on the side, I said, oh, that's sort of, it's like the financial strip search. It's like, it's just one more document, one more document.
It is
one
a
more
financial strip search.
How long does that last up to closing? Like, are you doing, like, day before closing, you picking up and verifying, hey, are you still, with the employer? Hey, are they still employed? Or are you like, when does that sort of stop? Or is it right up until funding?
Usually a week to 10 days prior to closing, everything's done. But we do rerun credit about 15 days prior to closing.
Yep.
10 days prior to closing, we rerun credit.
Okay.
Also 10 to 15 days prior, we call the employer, make sure they're still there.
Okay. Yeah.
That has come up.
Sure, of course.
Hey, don't quit your job yet. So.
Right. Don't quit your job. Good idea. Don't buy a car, right? Are these things you typically are still telling people on a regular basis?
Oh, yeah, absolutely. And we had one yesterday. We ran the credit. They had a credit from Credit Chrysler.
Yep.
Chrysler Credit. What's that? Well, we just bought a Jeep. Oh, great. Now I need to find out how much the payment is on the Jeep.
They didn't think about it, right?
So
you got to, that's a tip of the process. Any other tips of the process? People kind of getting ready right now.
Large deposits are a big deal. If you're moving money around and we get your bank statement and we see a large deposit, well, where'd that come from?
Yeah.
We want to make sure you didn't go out and borrow money. So a lot of times people might be moving money from a stock account to their checking account.
Okay.
To use for the down payment.
Yeah.
But we got to verify.
So you're looking at the bank accounts, you, meaning not you, but underwriters look at the bank accounts and they're like, wait a minute, where'd this $50K come from? Right? And
we've always looked for large deposits.
Okay.
But now our underwriters are looking through and saying, well, wait a minute, what's this check we see coming out every month
Yeah.
for $150 to so-and-so.
Let's shift gears. You got someone that is buying their first home, okay, and the prices are higher, rates are higher, and so affordability is an issue. Cash sometimes is an issue. What's generally allowable for a gift from, let's say, a family member or an outside source to help bolster the availability of a down payment amount for someone like that?
So the typical guideline is if you're buying your first house, we want to see that you're putting in at least 5% of the down payment.
Of your own money.
Right. So you put in 5, a family member could put in 5.
Okay. Is that tit for tat? Like it can only be that way, like dollar for dollar?
You could put in 5 and they could give you 10 to 15%.
Oh, really?
So that's fine, unless that gift is a full 20%, and then you don't have to put any of your own money in. So if a family member is going to give you the 20% down, then we're fine.
Okay.
We're good.
And then that could be a gift, but they could work that out later on.
They could work that out.
Value goes up, they refinance or something like that, the cash could flow back, et cetera.
Right.
But you're helping, or do you see a fair amount of that? Because I think affordability is harder for first-time home buyers right now.
We've got a couple right now that are getting gifts from family members,
Yeah, I mean, what a blessing that is, right? And enabling them to do that. I mean, my goodness, we always talk about the rent versus own sort of situation. Rents have gotten so high.
Right.
I think the argument is it'd be nice to put that money back into something that you're going to have some equity in.
Right.
Yeah.
I'm just trying to think, we just closed a loan this week where someone was buying a house. Grandfather's moving in with them.
Oh.
Grandfather put down the down payment. Grandson is going to make all the, he's taking on the mortgage piece of it.
Yeah.
But granddad gave him the down payment.
So a little bit of creativity happening there. We see that in the household too. We're combined households, and that's really fascinating to hear about that. Sort of everybody kind of trying to figure out how to work this engine a little bit more economically.
And then I've got one I'm working right now where it's a husband and wife buying with her parents, buying a second home together.
Oh.
So they're both putting in the down payment and all the money.
Yeah, they both get use out of the property.
Yeah, they both get use out of the property.
Win-win-win-win. That's what we're looking for these days. All right, Matt, awesome being with you. Appreciate the update, and we look forward to talking to you guys again soon.